Hello investors and welcome to my YouTube channel where I study the best investors and businesses from around the world. In this week's video, we'll go over the book The Making of an American Capitalist by Roger Lowenstein. I highly recommend that you read the entire book, which I'll link to below. Aside from Bill Gates and Mark Zuckerberg, Warren Buffett is probably one of the best known billionaires in the world. With his low-key profile and humble style, he does his own taxes and wears slightly shabby suits. The Sage of Omaha is a beloved man even among people who don't have much sympathy for the super wealthy. Number 1. Buffett's early childhood. Warren Buffett grew up in Omaha, Nebraska, where he was always thinking about money. Born in 1930, he lived through the Great Depression as a child and witnessed what financial struggle looks like. After losing his job as a security salesman in 1932, his father started his own business selling stocks and bonds. However, this still barely left his family with enough money to survive. These difficult circumstances shaped Warren Buffett's perception of money and fueled his desire for financial security and stability. Warren's father's business finally took off when he was 6 years old, and he enjoyed watching him work in his office and even took his son to New York for a business trip where they visited the stock exchange. This helped spark Warren's interest in finance. When Warren was 11, he made his first profit buying and selling stocks. In order to actually afford the stocks, he took part in different entrepreneurial activities, such as having 5 paper routes and finding lost gold balls on golf ball courses and then selling them back to the owners. Before Warren had even turned 15, he had saved $1,200 and used it to purchase 40 acres of land. After graduating in the top 3% of his class, he studied at the Wharton School of Finance and Commerce, where his passion for money grew and led him to postgraduate studies at Columbia Business School. There, he found his professor and mentor, Benjamin Graham, who helped impart his investment philosophy onto Warren. Number 2, the investment philosophy that influenced Buffett's investments. Benjamin Graham was an economist who was one of the first to conduct stock market analysis and had a unique but successful philosophy for finding the right investments. He thought that investors should always avoid risky stocks, which he calculated by comparing a company's intrinsic value and the market value it's being sold at in the stock market. If the intrinsic value is greater than the market value, he considered that to be a good stock to invest in, because it should eventually rise to meet the market value price. Buffett later used Graham's investing philosophy to his own business. You could tell a bit about how he was thinking at his ripe old age of 32. After Buffett's graduation, he was hired by Graham to work at his Wall Street investment firm, Graham Newman Corp., where he excelled and became a leading investor. However, at 26, he decided to move back to Nebraska to start his own company, Buffett Associates Ltd. Within a year, he managed to raise $500,000 and followed Graham's philosophy of investing in undervalued companies, which saw large returns down the line. After the success of his business, Buffett's next step was to purchase controlling interest in Dempster Mill Manufacturing, which at the time was a dwindling windmill company that didn't see much interest from investors. Buffett became the chairman of its board of directors and helped fix the company's financial problems from the inside. This worked, and only a year later, Dempster Mill Manufacturing was worth $2 million on the stock market, twice its value when Buffett had first purchased it. Eventually, he sold the company in 1963 when it gained 3 times its original value, leaving his partners with $2.3 million in profit. In 1965, by the time Buffett was 35, his portfolio was worth $22 million, and his net worth sat around $4 million. Why Berkshire Hathaway is the company most associated with Buffett and his ideology. While Buffett has bought his fair share of successful companies, his most well-known is Berkshire Hathaway, which he founded in 1962. Berkshire Hathaway began as a textile manufacturer in 1839, But by the 1960s, many American textile companies began losing business to the cheaper manufacturing markets in Asia and Latin America, causing stocks to fall. When Buffett started buying stocks in 1962, it was only worth $7.60 per share. But after Buffett's calculations, he discovered the intrinsic value to be $16.50 per share. Thinking this was an incredible deal, he bought every stock that he could and became the majority shareholder. In 1969, Buffett wanted to spend all of his time and energy with Berkshire, so he made the decision to dissolve his original Omaha partnership, which had grown from $500,000 to $104 million. As chairman of Berkshire, Buffett added many new companies to its holdings, which allowed Berkshire's own shares to skyrocket in price, rising from $7.60 in 1962 to $95 in 1976. At this point, Buffett was paving his way to mega success. In the 1970s, Buffett fulfilled his dream of buying a newspaper company. Berkshire became the largest shareholder of the Washington Post, which was the same newspaper that he used to deliver for as a kid. Buffett's investment philosophy began to change during this time as trends in the economy shifted. Rather than solely purchasing undervalued business, Buffett had gained interest in larger, well-known companies, including the Washington Post, as well as the insurance company Geico. However, he didn't throw Graham's investing philosophy completely out the window. Instead, Buffett adapted it by considering a company's entire brand rather than just its financial assets to calculate intrinsic value. During this time period, Buffett was considered a very successful investor, and his salary hovered around $50,000. However, in the 1980s, his net worth exploded exponentially to $140 million, with Berkshire trading at $290 per share, which was even exceeding the Dow Jones Industrial Average. After a large cut in interest rates by 1983, Berkshire stock was worth $1,310 per share, and its holdings were valued at $1.3 billion. As a result, Buffett's net worth grew to $620 million over 4 years. Despite his immense wealth, Buffett isn't necessarily a typical Wall Street billionaire. For instance, he dislikes the notion of an elite class, and even during his success, he continued to live in the modest house that he bought for $31,500 when he was just 27 years old. Unlike his wealthy peers, Buffett has spoken out against tax cuts for the rich, which he deems welfare for the wealthy, even though they would benefit him financially. He also doesn't want his children to constantly depend on him, and has ensured that they forge their own paths and save their own money. After the death of his wife in 2006, he decided to donate most of his estate to charity. Already a significant amount of his fortune has been distributed to Buffett Family Foundations and the Bill and Melinda Gates Foundation. His charitable legacy is much for him to be proud of. This was a recap of the book, Buffett, The Making of an American Capitalist by Roger Lowenstein. I'll leave a link to the book in the description below, but to summarize, Warren Buffett's success can largely be attributed to his mentor, Benjamin Graham, who helped him learn the essential distinction between how much a firm is genuinely worth and how much it sells for. Buffett's wealth of more than $66 billion stems from his ability to see this distinction, as well as capacity to keep careful track of trends. What do you think of Warren Buffett's life and his investing philosophy over the years? Do you think it's applicable to the decades ahead? Let me know in the comments down below. Thank you so much for watching, and if you like this video, please share it with your friends and family. It helps the channel a lot. Leave in the comments section your thoughts about the next video and who we should cover next. With that said, thank you guys so much for watching this video, and I'll see you in the next one.